Hey guys, it's Sam with Ready, Set, Go. Welcome to the video. So today I want to take a quick minute to talk about Pfizer, PFE ticker symbol. So Pfizer was one of the first stocks I bought when I switched over to the dividend investing strategy. Kind of in retrospect, hindsight is 2020, and looking back, it may not have been one of my best choices so far. Don't get me wrong, Pfizer is a great company, one of the largest biotech companies out there, but there is this thing called the patent cliff coming up, and in 2018, a lot of the patents that Pfizer owns for many of their blockbuster drugs, such as Lipitor, are going to expire. Celebrex, I believe, is in 2015, and Viagra in 2017. So, knowing that generics will come out into the market at lower costs that are able to compete with Pfizer's existing drugs does not bode well. That's definitely going to eat into revenue, and as we all know, lower revenue equals lower profits. So, the one in particular that is huge is Lipitor. They expired in 2012, and in 2006, Lipitor was at 13.7 billion in revenue, and last year they were down by about 2.3 billion from that. So, if that's going to be this, if we're going to see that same trend across all of Pfizer's drugs, that does not bode well at all. So, let's take a quick look here. Logged into my options house account, just typed in PFE at the top, go over to research, and we get to take a little bit of a deeper look here. All right. So, surprisingly, analyst expectations are good for this. Good for Pfizer, which is not bad. I usually tend to not kind of agree with these guys. Not per se that anyone's wrong. It's just sometimes there's a institutional manipulation of analyst opinions. So preferably it's something good to look at, but don't take it for face value. If you see a lot of buys, that doesn't mean you should just go buy it. Obviously, take a look for yourself. So short interest sitting at 1%, that bodes really well for me. What short interest is someone is betting against the stock. They don't want the price to go up. So if the price goes up, anybody that's short a position actually does end up making money. And this is probably my favorite indicator here. It's a 3.74% dividend yield. That was one of the reasons I actually wanted to get into Pfizer at the first place. My background's in molecular biology, and always was interested in biotech and pharmaceuticals. And Pfizer's had a great name for many, many a years, many a decades. So that was one of the reasons I wanted to get into that. And you don't win every one of them, but so far I'm down about, I believe, 2% on Pfizer. So not losing too much. Obviously, wish I was up more, but these concerns with the pipeline, every pharmaceutical company, the major way that you can kind of estimate their forward earnings growth and revenue growth is by looking at their drug pipeline. Um, R&D is a huge part of this. The more money you put into R&D as a pharmaceutical company, the more drugs you can get into clinical trials. And once they reach that FDA approval, then they can actually go out and start earning revenue for you. So as of the moment, Pfizer does have 83 drugs in development. Hopefully, one of those hits kind of offset the patent cliff and the revenue downturn from that. There's about 26 of them. 26 of those drugs are in phase three trials. That bodes really well. That means they are nearing the end of that cycle. And in maybe 3 or 4 quarters, they should, if they do get through the entire testing phase, they should be able to start earning revenue for them. So let's go take a look at the technicals real quick. All right, call to put interest. That is really good, actually. 0.87 put to call ratio means that people are bullish on this. They are looking, they do expect the price to increase. Again, options, not many of you, even myself, not really too invested in that. A small percentage of my portfolio, I do make really, really long term options plays. nothing too risky, nothing too out there, nothing short term. That's for sure. And if you do want to get into options, that's kind of what Options House was built on. So probably one of the better places to be for that. Again, I don't recommend anyone get into options without kind of looking at without actually going through the process of virtual trading, doing the long term hold, buy and hold play, and then also kind of getting into the short term strategies and getting a real feel for the market, price swings, the variance that comes with it, and being able to emotionally kind of sustain these downturns. Especially with options, you can lose 50% of your value, in the matter of hours. So definitely, get used to being invested in the market before you get into options. But it is a great indicator to see short to medium term sentiment. How are investors kind of perceiving the stock at the moment? So, overall, Pfizer's not looking too bad. The main problem I just have with them now, I bought them about 2 or 3 quarters ago, and at the time, I thought they were somewhat undervalued. The more I look at them, the more I see that, it's not the best long term play, 3, 4 years from now. If they're not able to get those drugs in their pipe out to market and, actively generating revenue for them, it's going to be a very, very tough road for Pfizer. So, not looking to sell. If at this point, I would probably still hold it. It's still a mega cap stock. It's a blue chip pharmaceutical, and they are profitable and they do have a dividend. But at the sign of their first downturn in either their revenue or their dividend yield, then I would be looking to kind of maybe back out of this position. If they do cut the dividend, that would be a huge one for me. That would essentially signify or signal that this is no longer a stock that I want in my portfolio, no longer a stock that I think would be beneficial long term, and my money could be used elsewhere. But yeah, that'd be about it. Go take a look at Pfizer. If you guys are in it already, kind of review this. This would be a good time. And if you aren't in it, I would probably stay away. Even though I do own them, I'm going to recommend that you kind of just stay away from this. There's a lot of other pharmaceutical companies out there that don't have these don't have this looming cliff 3, 4 years from now. So, and as you know, as a dividend investor, you need to look really, really far out. 10 years, 20 years. How can these dividend stocks continue to compound my portfolio and continue to keep it growing at a consistent and healthy rate? So, well, that's it for today, guys. I hope you enjoyed the video. Continue to make a lot of these. If you enjoyed it, please give this video a like or share or subscribe to my channel, and you'll get updates when I release more of them in the future. Thank you guys for watching. Peace.